exercise with you about the topic of the week, to talk a bit more about accruals and reversibilities. There's a handout coming down your row. I've got plenty. I hope that you'll pass them there quickly. If there are extras, I would like them back so I'll have enough for my sections tomorrow. When you get it, will you put it face down on your desktop and not look at it or read it yet? And allow me to set the stage. So let's pretend that you read in the book, in a homework problem, paid weekly salaries. What entry would you make? Let's pretend we opened the book to an exercise right this minute and it said, paid salaries for the week. What entry would you make? Let's pretend that you are on the job and it is your job every week to record salaries. What entry would you make? Chris, was your hand up?
Salaries and wages, expense, debit, and credit, cash for the amount.
That is correct. Well said. The book's account title is Salary and Wages Expense, Debit, Chris says, and Cash Credit. I'm going to call it Salaries Expense, just because I'm writing it out, try to save a little time. Salary and Wages Expense, Salaries Expense, and Credit Cash. Right, Chris?
Yes.
How much, Chris? You were starting to say, and I cut you off?
The amount of whatever.
The amount of the whatever. I write all that in that square?
The amount that
I can name that tune in one word, 4 letters. You want to play hangman? I don't have time.
Okay.
Somebody help Chris and me out here. Make this entry for
Debited amount.
a descriptive word. I was thinking the amount paid. Is that okay with everybody? Yes or no?
Yep.
Yes. The amount paid. Now, I would like to propose that this is the regular way, the ordinary way, the usual way, the customary way that we record this transaction. I want to establish that right this minute, that that's the way we do it. If you want to argue with me, argue now and not at the end of this exercise, because I'm making a point at the end that starts right here. Is this the way we pay salaries? Yes or no?
Yes.
It is. So, you may turn the handout over now and read with me. Salaries expense has a balance of $574,000. Let's get us one. Salaries expense has a balance of $574,000. Did I remember the number correctly?
Yes.
At 12/26. So let's just pause a minute and talk about how that number got there. Anybody want to jump into this one? How'd that number get there? Elaine?
Over the whole year, that's so far how much you paid in salary expenses?
Well said. Thank you very much. We made this entry and posted it over and over again. 52 times if we pay every Friday. 12 times if we pay once a month. 24 times if we pay on the 1st and the 15th. 26 times if we pay every other Friday. Y'all with me here? We've been making this entry over and over again, and this account's just been growing and growing. This represents the total amount we've paid up through December the 26th. So let's talk about, this is the same illustration I used in lecture a couple of weeks ago. Let's talk about end of year matters. This is Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday. Let's pretend, no, we don't have to pretend, it's said as a statement of fact. We did that on the 26th. And 27, 28, 29, 30, 31. Huh? Yeah, 1. Okay, 1, 2. I don't know why I didn't write it down. I didn't last hour, so I didn't this hour. Don't ask me why. So, last Friday was the end of the pay period, and we made out the checks, and the checks were a stimulus. I don't mean in the economic sense like we hear in the news all the time right now. I mean a reminder, a tickler. The checks reminded us to make that journal entry and to post. We were paid up and recorded up on Friday. Agree or not? What happened on Saturday?
We hope.
What happened on Saturday? Nothing. The sun didn't rise, the bird didn't sing, the wind didn't blow, nothing, absolutely nothing happened on Saturday. Elaine?
Well, I was gonna say, are workers working on Saturday?
Well, I didn't tell you that. I was throwing it out there, letting you assume. You know, in this 24-hour-a-day, 7-day-a-week world that we live in these days, that's a harder question to answer than me telling you my intent was this be a 5-day work week, an 8 to 5 kind of job. What happened on Saturday? Nothing, but then I got sarcastic about that one. What happened on Saturday?
Did not accrue anyway.
We didn't work. We went on a picnic. We went to the kids' soccer game. We went to the lake. We mowed the yard. Why must I do all this? Can y'all think of anything we might have done on Saturday? Took a nap. Cleaned the house. Okay? What happened on Sunday?
Church.
Went to church. Watched football. Went out to lunch.
Discussion.
Went to the review session. So you're still thinking like students. I'm thinking about regular people.
Well, I always worked on Saturday. I spent 2.5 in the manual labor, or 2.5 years in the manual labor, and I worked Saturdays and Sundays.
Okay.
So.
Okay.
7 days.
This is your professional career. You're going to do this someday when you get out of college.
Oh.
What do we do on Sunday? Did we do enough on Sunday yet? Nap? Did we say nap? Monday?
Work.
I'd have to give.
What happened? What happened on Monday? Help me out.
Work.
Come on, we went back to work.
Work, yeah.
Tuesday?
Work.
Wednesday?
Work.
Now, our employees worked for us these 3 days and helped us earn revenue. And the revenue they helped us earn, we are reporting on this year's income statement. But the expense that we incurred for them won't be recorded until Friday. Is it good matching? Is it good income statement presentation for us to record revenue in this year and expense in another year? Is that our goal?
No.
Is that our objective? No. To record revenue one year and expense another is not matching. We need to do something to get the revenue and expense in the same year, on the same income statement. Yes? Thus, the necessity to accrue, read your handout again, 1231, recorded accrued salaries, $6,000. We've been doing this for 3 weeks now. Somebody ought to be able to make me this entry. Would you? Quickly? All right. Recorded accrued salaries, $6,000. Pick me something to debit, something to credit. Help me out.
Credit $6,000 for.
To what?
To
Give me an appropriate account title to describe that.
salary expense.
Salary expense would be the debit or the credit.
Debit.
Good. Debit salaries expense, $6,000 is correct. And something to credit?
Cash.
Did we pay them?
No, well, no. Accounts payable.
Or salaries payable?
Salaries payable.
Or interest payable?
Salaries payable.
Salaries payable?
Yeah, consistency.
There you go. Debit salaries expense, credit salaries payable. So, Graham, it's not the same entry that we made here. This one was a payment every Friday. This one is for a partial week. We're admitting that we owe them, but we're not paying them. Isn't that the point?
Yeah.
Are you with Graham and me, class? Yes or no?
Yes.
So let's post. Here is the 12/31 accrual, another $6,000 in this account. Let's do a salaries payable while we're here. Salaries payable on 12/31 and accrued $6,000. So Graham's entry, debit salaries expense, credit salaries payable, posted to these two accounts, both updated. If you've got a question, you ought to ask me right now. 31. Close the salary expense account. Everybody in this room ought to be able to do that. How about one person picking up the pace a little for me? Make me a closing entry. Talon.
We're gonna credit salaries expense for $580,000.
And debit.
Set out. Or we're making a journal entry, or
We're making a journal entry.
Oh, we're not using. Okay.
A closing entry.
And we're gonna debit. Income summary.
I had a flashback to Tuesday. Tuesday, you gave me the closing entry that was apparent and then said do nothing for the other half. Remember that?
Income summary.
And then later you figured it out.
Yeah.
And you figured it out today. Good. Every entry's got to have a debit and a credit. We're going to debit income summary and credit salaries expense for $580,000. Let's post $580,000 to this account. Makes the balance of this account 0. Doesn't it, Talon?
Yes.
Doesn't it, class? 1-1. Recorded a reversing entry. Let's go chronologically down the path and figure out 4 ways that we knew to make a reversing entry in this case. The first thing you heard about knowing when to make a reversing entry from Monday's lecture was a rule that works sometimes. Can you say that rule to me just now? I thought we agreed on Tuesday that I'd say them on Tuesday and you'd say it on Thursday. Talon, you just did the last one for me. I'm going to try to get somebody else to participate. The first rule we learned about identifying which entries needed to be reversed, Alina, was all accruals need to be reversed. Not just accrued expenses, but all accruals need to be reversed. So is this an accrual or a deferral? This is an accrual. It says on the 12/31 entry, recorded accrued salaries. Accruals are things that happen before you pay for them. This is an accrual. So that's good enough. The very first one would let us know that we needed to make a reversing entry. The second rule. Anybody willing to try to say the second rule? Graham?
Sometimes deferrals need to be reversed.
I like it. I can't believe it, but I do. So how can you identify which deferrals need to be reversed?
If you've already paid for it.
If an adjusting entry, I was going to get you to say it. You tricked me into saying it. You pipe down. Or I'll call on you and make you say this. Come on, somebody say.
Isn't it if like you're adjusting?
Oh, you always start with a question, don't you?
Sorry.
Brooke?
Isn't it? Oh, I was going to do that again.
Try.
The adjusting entry is the first account. It's like the first in the credit. The first.
Not necessarily credit. If an adjusting entry is the first entry in a balance sheet account, is what you're trying to say.
Yes.
Yes, Brooke?
Yes.
Graham, she tricked me into saying it. If an adjusting entry creates the balance in a balance sheet account, it needs to be reversed. Let's put that one to the test. Here's an adjusting entry. It's a debit to this and a credit to this. Uh-oh. Which of these is the balance sheet account? Speak up. Salaries payable is the balance sheet account. Is this the first entry in this account? Indeed. We've been making this entry all year long. We haven't made any entries involving salaries payable. For the first time, we created the balance in a balance sheet account. When an adjusting entry creates the balance in a balance sheet account, it's to our advantage to reverse it. The third way we were prompted in Monday's lecture was the decision tree. If I saw one on somebody's desktop, I'd encourage you to follow the path. I'm not going to right this minute, but it'd be a good idea to follow the path for accrued expenses and see that all the accruals reach the conclusion on the decision tree. They need to be reversed. That's the same as the first one. I said there were 4 reasons that you should know to make a reversing entry in this case. If I had a limited time, I would pause until you came up with the 4th one. I don't have unlimited time, so I play my hand. It says right here, recorded a reversing entry. So if you have no clue whether or not to do this, you'd know to do it because you were instructed to do it. Make me a reversing entry. Chris?
Debit salaries payable for 6,000, credit salaries expense.
Debit salaries payable, credit salaries expense with $6,000. Let's post. The reversing entry, debits salaries payable, 1-1, and credit salaries expense, 1-1, 6,000. Oh, wait a minute. Salaries expense has got a credit balance, Chris?
No.
Yeah? Here's the adjusting
Oh,
entry.
yeah.
A reversing entry is exactly the opposite. Here's the adjusting entry. Here's debit salaries payable, credit salaries expense. Oh my goodness. Let's read the handout. What is the balance of salaries expense January 1st? Everybody said? One person said. Let's try that one more time. What's the balance of salaries expense right this minute, class?
Credit $6,000.
6,000 debit or 6,000 credit?
Credit.
Normal or abnormal? Weird or what?
Weird.
Weird. This is weird. My goodness, 6,000 credit. Is the balance of salaries expense January 1st an asset, liability, capital, revenue, or expense? Make up your mind. Oh, that we had clickers. Make up your mind. Is the balance of salaries expense right this minute an asset, liability, capital, revenue, or expense, Stephanie? Speak up.
Expense?
Danny,
Expense.
Luke,
Expense.
Alina,
Asset?
Chris,
Liability.
Brian, Chris,
Asset.
Talon.
I don't know. I'm
You know that's
confused
not
now.
you know that's not an acceptable answer. don't you? Okay, you gonna leave this question blank on the test on Tuesday?
I would say revenue because isn't it the opposite of?
I don't want to talk about it. Did they get
Okay.
to discuss it?
No, sorry.
Ethan,
Liability.
Luke,
Expense.
you should have been here last hour. Every person in the room. I got no variety at all. I got expense. So we finally just voted. We did clickers the old-fashioned way. And every person in the room, 100%, voted expense. Isn't there merit to the answer expense? Hello, what's the name of this account? Isn't that a strong thing that you'd have to really, really resist not falling for that temptation?
Yeah.
A balance in salaries expense is an expense. Or is it? Well, let's go back to here. These employees worked for you. Here we are today, looking back on the events of yesterday. Yesterday, we owed them. Did we pay them?
No.
Then we must still owe them. What we did through the reversing entry was take this amount that we admitted that we owed and we moved it to this account. What was in the liability account isn't there anymore. This is a liability. It's got a credit balance. A credit balance on the first day of the new year, right after the reversing entries, before you make any other entries, is a liability. Are you with me? Say yes or no.
Yes.
2, January 2nd, that means. Recorded salaries paid, $10,000. Lots of people in this room should know how to do this entry. I'm just looking for one. Would you please? Elena?
Salaries paid, so it's going to be cash will be, okay, the credit's gonna be cash. Debit will then be on accounts payable.
No? Credit cash is correct. Debit what?
Salaries expense.
She's said with confidence?
Salaries expense.
Or accounts payable.
Wouldn't be accounts payable, so anything would be salaries payable.
But salaries payable has 0 in it right now. Looks like that's pretty much taken care of.
Oh, yeah, so it'll be salaries expense.
Oh, okay. Debit, we already did those two and I just forgot to uncover. Debit, salary expense, and credit cash. Alina.
Yes.
Class. Class.
Yes.
Debit, salary expense, credit, cash. Alina, tell me about this entry compared to this entry. How does this entry look compared to this entry?
The opposite?
It is?
Oh, wait, no, it's the same thing, never mind. Sorry, I'm a little out of
How
it.
does this entry compare to this entry?
It's the same thing.
It's exactly the same thing, isn't it?
Yeah.
So if you've been making this entry for 52 weeks, for the 5 years you've been working here, for somebody to ask you to make this entry is just no problem whatsoever. You understand this one, don't you? Yes?
Yes.
Yes, class?
Yes.
Let's post. Debit, salaries, expense, $10,000 on 1-2. And credit cash, I don't have a T account for cash. So what's the balance of salaries expense right this minute? That question's asked here. What is the balance of salaries expense now? Everybody said?
$4,000.
4,000 debit or credit?
Debit.
Normal or abnormal?
Normal.
Normal. Ah, that feels better, doesn't it? So, the second to last question at the bottom of the page. Of the $10,000 salary payment on January 2nd, how much is expense in January? Well, let's talk about this. We just paid employees for the whole week, didn't we? How much was it?
$10,000.
$10,000. Now, 6,000 of that belonged in the previous year, which leaves $4,000 in the new year. Yes or no?
Yes.
Do you know the answer to the question? Of the $10,000 salary payment on January 2nd, how much is expense in January? Everybody said? And look, we've got an account balance that is $4,000, the right amount in the expense account, and we achieved that by recording the transaction to make the payment in the new year in the same way we always did. Now, it's a simple little one illustration example, but the conclusion of this, the point of this handout, was to say reversing entries help you make the same entry in the new year that you always make. It's 2 days later. Maybe you could figure it out. I used to teach out of another publisher's book that used an illustration like this in a homework problem about interest on notes. And there were several notes that we had to accrue the interest leading up to the end of the year, 12/31. And then those notes became due in January and February and March. And we had to make the allocations in the coming year. Or we could have reversed it and not have to make any of those calculations in the coming year. It was a glaring, good, convincing argument that it's good to make reversing entries. It makes things in the next year go better. This is one little teeny namby-pamby illustration to try to convince you of that. Consider with me the last thing on that list. If there had been no reversing entry, how should the salary payment of January 2nd have been handled? Well, let me recreate. If there had been no reversing entry, well, we don't have this, and we didn't make this payment yet, that's what we're trying to do. And we wouldn't have reversed it, this was a reversing entry, and I believe That's a reversing entry, that wouldn't be there. So this would be the exact circumstance we would be in. If there had been no reversing entry, how would the payment have been recorded on January 2nd? Chris, is that a volunteer hand? Let me hear it.
Salaries payable, debit 6,000, salaries expense, debit 4,000, cash debit 10,000, or credit 10,000.
Debit salaries payable, debit salaries expense, credit cash. The entire payment that you're making would have to be split between what you have already recorded and what has never been recorded. Did y'all hear what I just said?
Yes.
Would it be worth repeating? The payment that you're making for the entire week with no reversing entry would have to be split between the portion you have already recorded on the books and the portion you are now recording for the first time. Salaries payable and salaries expense. Let's post. Before I post, Chris, let me ask you this. Is this entry exactly the same as that entry?
No.
No. That's the point. When we reversed it, we were able to make the same entry that we always did. When we didn't reverse it, then it took this. If you've been doing this 52 times a year for 5 years, are you going to understand this one occasion?
But wouldn't you just know that it was?
If you're smart enough, but maybe you're not. Maybe you're in a rut. Maybe you're just doing what you always did every Friday. You don't see the impact of 52 times and 5 years doing that? This would be a little abnormal, wouldn't it? Uncomfortable. The point is that reversing entries help make things in the next year go better. It's highly recommended that you reverse everything that needs to be reversed. And then you can handle transactions in the coming year in their normal way, knowing things will come out right. Do you have a question about this exercise? Have a nice day.